Are the near-term headwinds in Nike's business model a reason to buy the dip, or is this one showing signs of a long-term deterioration in its business model? Hey guys, hope you're doing well out there. Today we are taking a look at Nike Incorporated, ticker symbol NKE. We will dive into their earnings, their revenues, and end off, like we always do, taking a look at the technicals for Nike to determine if this is a buy, hold, or sell at these levels. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button. Nike reported their Q4 numbers after the bell today. EPS came in at 66 cents versus 67 cents expected. Revenues beat by roughly $250 million, coming in at $12.83 billion versus $12.59 billion expected. Sales for this most recent quarter were up 5% from a year ago. And since this was Nike's fiscal Q4 for fiscal year 2023, revenues came in roughly up 10% from a year ago. EPS for the full year came in at $3.23, in line with analyst expectations of $3.24. EPS for the full year was down 16% compared to a prior year ago. The biggest reason for this EPS decline year over year was a 2.5% decline in their gross margins, primarily due to higher product input costs, elevated freight levels, higher logistics, higher markdowns, and continued unfavorable changes in Forex rates. Taking a look at the balance sheet for Nike, inventories came in flat year over year, coming in at $8.5 billion. And so for Nike to move this inventory, they will have to continue to do higher markdowns, leading to gross margin pressures. Cash and cash equivalents for this latest quarter were down $2.3 billion as they spent this cash on share repurchase, dividends, capex, and retiring $500 million of debt. Nike is a consistent dividend growth company as they have 21 consecutive years of increased dividend payouts. Dividends for this last quarter were up 9% year over year. Nike also has announced a 4-year, $18 billion share repurchase program. And so for this $180 billion company, an $18 billion share repurchase indicates Nike is planning on retiring nearly 10% of their outstanding shares over the next 4 years. They also did have a $15 billion share repurchase program, which terminated in August 2022, and they used nearly $10 billion of that share repurchase program. As you can see, Nike is growing their dividend on a year-over-year basis by roughly 10%, and so we'll take a look at their current EPS and see if this is sustainable. Taking a look at earnings estimates, we can see Nike experienced that 16% decline in EPS for fiscal year 2023. However, they are projected to raise their EPS quite favorably over the next 2 years, raising it all the way up to $4.62 from this current year of $3.23. Sales are also expected to rise in the mid-single-digit range, growing from $50.96 billion all the way up to $58.7 billion. Moving on to the statements of income, we can see revenues were up nicely 5% year over year. However, cost of sales outpaced that, growing at 7% year over year. This led to a 1.4% decline in gross margins compared to a year ago. We can see that 2.5% decline in gross margin for the fiscal year. Moving down, SG&A costs did expand roughly 8%, leading to a larger portion of their revenues. This trickled down to their net income, which was down roughly 30% for this most recent quarter, and net income was down 16% on a full year basis. So we can see that this particular quarter was difficult for Nike as compared to their full year. They posted an EPS of $3.83 for the full year. Taking a look at their dividend, Nike pays a dividend of $1.36, and so this yields to roughly a payout ratio of 40%. And so while Nike is experiencing EPS contraction, they do still have room to grow their EPS as the years progress. We can see outstanding shares are down a little bit year over year as a result of their share repurchase program. Coming down to their balance sheet, Nike's cash and cash equivalents trickled down 13% year over year as they paid down this $500 million of short-term debt. They also paid out dividends and did stock buybacks. All things considered, their balance sheet looks fairly healthy as total current assets come in at $25 billion compared to a total current liability number of $9.2 billion. So a current ratio of well over 2. Nike does break down their revenues on a divisional basis, and so you see North America grew favorably on a full year basis. However, Greater China did experience slower growth and even contraction. The Chinese economy was just slower to reopen in general, and so because Nike gets such a large portion of their revenues from China, a slower economic recovery in China did hurt their business model over the last few years. Looking at Nike's revenue by brand, we can see that their wholesale customer revenue grew 7% on a 12-month basis. However, Nike direct-to-consumer business grew 14%. And so we can see that their D2C business is growing faster than their wholesale customer business, which is good to see for Nike, as their D2C business would be higher margins. Wholesale customers would be customers such as Foot Locker, and so portion of their revenues they would have to be giving to Foot Locker. And so we like to see Nike grow their Nike direct business faster than their wholesale customer business. Taking a look at Nike's revenues by brand, we can see Jordan brand outpaced growth in all other revenue segments, up nearly 30% from a year ago. Moving on to the technicals for Nike, we can see that after hours it is down to $108, roughly where this yellow line is. And so in terms of levels of support and resistance, I can see a level of support near $100 for Nike and a stronger level of resistance up around this $125 level. Personally, while I do like Nike at this $108 level, I would look to accumulate shares underneath $100, somewhere between this $80 to $90 range, as I can see Nike going back down there due to these recent short-term headwinds. That was Nike for you guys. In my opinion, overall a great long-term company that is experiencing short-term headwinds due to higher inventories and higher markdowns. And so that margin contraction they're seeing, hopefully they can turn that around. If you do believe that these earnings estimates will hold true and you see earnings rise all the way up to $4.62, they do have plenty of room to grow this dividend and continue their share repurchase program. Let me know your thoughts on Nike in the comments below. Do you think this is a buy, hold, or sell at these levels? As always, thanks so much for listening, and I'll see you guys in the next video.